Hello, everybody. Rick Malero here with His Capital, and today I'm going to start a series. It's a 10-part series about how to properly get funding for fix and flip properties so that you can successfully do deals without losing everything. So here's video one. In this part, we're going to be addressing a really simple but introductory question to fix and flip, which is what is real estate funding for fix and flip properties? Okay, so as we talk about funding, especially if you're already a fix and flip client, chances are you already fully understand that there's a variety of ways that you can finance your deal. One of the most popular and common ways to do that today is through subject to financing or seller financing because the economy has shifted. But the traditional way typically is you get a partner or a private investor that's going to lend you money on that project, right? And the benefits of that is there's a lot of flexibility. That being said, the negative, of course, is that that lender is going to be limited to however much money they have. So the moment they tap out of cash, you run out of funding opportunities for your business, right? So, but that's a very common way to fund your deals. Now, the next level version of that is, of course, to work with private hard money lenders, very similar to what we do. And these are private lenders that have gotten to a certain level of institutional capital where they can fund millions, if not hundreds of millions of dollars in transactions. What that allows the investor like you to do is to be able to scale your business and have a consistent funding machine that funds the projects as you find them. Of course, you're looking for properties that are distressed, that you can renovate and put new value to those properties and make them marketable so that you can turn around and sell them or potentially lease them, especially in this particular market. So, what is the benefit of funding business transactions? Well, let's be honest. When you're funding a fix and flip property, if it made sense to go to the bank, why wouldn't you, right? Because the bank is a cheaper rate and they're able to provide billions of dollars in capital resource. The problem is when you're funding these types of distressed properties, most banks will not touch them with a 10-foot pole. So that leaves you with having to work with a visionary that understands the business, that is willing to take the risk to fund this distressed property and also provide some form of funding for the repairs so that you can get the deal done. Now, I will warn you, we live in a world where everybody wants more loan to value, lower rates, and speedier closings. But here's what I have learned over the last 20 years. And that is that investors that are always seeking for 100% of debt funding, generally at some point in the real estate cycle, those are the guys that go bankrupt. So even though I lend money and I offer some pretty aggressive terms, what I want to make sure is that my clients continue to do more business rather than go bankrupt. So if you're an investor and you're constantly looking for ways that you can get more capital, I want to warn you because I've literally seen, even in this market, several of my clients that took the bait for higher leverage but paid the price in bankruptcy. And we don't want you to be in dealing with that. Now, what is the perfect balance? Well, if you're doing business transactions and you're doing multiple deals a year, especially in a market that is uncertain like the one that we face today, it is important to do a combination of what we call debt and equity. What that means is that you can borrow money from an institutional investor, let's say like us, but make sure that you balance the debt so that you can truly carry it for 6 to 12 months. Even if you think you can flip a property in a matter of 4 to 5 months, I would encourage you to budget for interest payments of up to 12 months just in case. Which means that if you don't want to get killed with interest payments, you want to find that balance where you bring on an equity partner that provides that gap funding for the payments, for the remainder of the down payment, or any additional carrying costs. What this does, even though it may cost you a little more in equity, is it creates a level of stability for your budget so that when you're buying these properties, you're shouldering the risk with a partner. In this way, you're not over leveraged so that if the market changes, the lender takes the property and you lose everything. Okay, so that's an essential piece. Now, why is this such a valuable proposition? Because think about it. As a real estate investor, even if you make $30,000, $40,000, $50,000 in one deal, you're taking all that risk on one opportunity. So if the deal goes sideways or if it takes longer, you're going to make less money. But if you are strategic about how you borrow capital from investors like me, or even bring on joint venture partners to increase your buying power, what this allows you to do is to buy 4, 5, maybe even 6 properties with that same budget over the course of a year so that even if one doesn't perform, you are shouldering the risk with the portfolio of real estate opportunities. Not to mention that even if you make a little less on the deals because you had to make interest payments, at the end of the day, because you did 6 deals over the entire portfolio, you made more money. That is the basics of fix and flip funding and making sure that when you borrow intelligently so that you're not the one that loses everything. Well, I hope you found this video valuable and that you see that we're really trying to make sure that we expose a reality on both the good and the bad. So stay tuned for the next video where we're going to dive into the actual hard money and the funding options that are available so that you fully understand as an investor how you can maximize on your returns while still limiting the risk so that you don't lose everything. Thank you so much for taking the time to watch this video. I hope it was valuable to you. Please make sure that you like, subscribe, and share. And also, if you have some additional tips or strategies that you want us to cover with real live action projects that we fund, feel free to put those in the comments. We look forward to sharing with you more content. Until we meet again, don't forget to invest with purpose.